welcome to Finance Today. Today we have a great episode for you. We have our first guest ever coming on, talking about the real estate markets. First, before we dive into the real estate markets, I wanted to thank everybody who's shown their support over these last couple videos. We really appreciate it over here. We're just getting started and it's only going to make us grind harder. In the last few videos, we've talked a lot about how this economic crisis is affecting the stock market. Today we wanted to take a break from that and dive into the real estate markets and consult an expert, figure out how the crisis is affecting those markets as well. Our guest today is Chris Strauss. He's the branch manager over at Simple Loan Group, and he's been handling financial transactions for real estate for the last 4 years. Chris obtained his real estate license in New Jersey in order to further his education in the real estate markets. He's a firm believer in investing in real estate for financial freedom. We've got Chris on the line right now, and we're going to jump into a Q&A session about the real estate markets. Chris, what's up, man? How you doing?
Hey, Danny. How's it going, my guy? How you doing?
Good. Thanks for coming on. Thanks for being a part of Finance Today.
Thanks for having me.
Excellent. Let's dig right into it. With a little
Danny,
pause.
really quick before you start with these questions.
Yeah.
I just wanted to show you my crystal ball. All right?
Wow.
So
okay.
Here's the reality, right? Because I am the only loan officer or mortgage professional in the world who has an actual crystal ball, I know all the answers, okay?
It works.
Are you ready? What will happen to the real estate market? Oh, we've never been through this before, so nobody knows. Okay.
That's the best disclaimer I've ever heard.
I appreciate that. The point I'm making is these are very unprecedented times. I think a lot of people are selling everyone a pipe dream. And I think it's very important to just be honest that we're not nobody, doctors, economists, whatever the word is. A lot of people we don't know exactly what's going to happen. So we have to take this day by day and just keep trying the best we can. And I will personally give you as much information today as I can.
Well said. Thank you, Chris.
Absolutely.
All right, so the first question, how is this crisis affecting the real estate markets in general? Are we seeing less people buy houses? Are people transitioning from renting to buying at this point? What can we expect from the consumer?
So very short term, obviously when the country shut down, it really slowed down the industry. And at first, essentially paused it. I would say definitely in the last couple of weeks, you're seeing more transactions getting to the finish line. And according to Housing Wire, there was a stat that showed in March, it was overall new sales went down 15.4%. And that's going to continue in April. What I can tell you from my experience so far is that it seems that this pent up demand that they keep using is real. A lot of people are reaching out now to figure out what is the game plan when the lights do fully turn back on. What do they have to do to buy a house?
Got it. So you have all that demand. It hasn't gone away, but it's just stored itself.
Yeah.
And these people are still wanting to buy houses, but they're just physically unable at this point.
Correct. And I think the other thing as well as with technology, just with so much information out there, I truly believe that people really want to become homeowners versus renters because it's kind of common sense, right? You throw money out the window as a renter versus being a homeowner, you gain equity, you have tax write-off benefits. So it really, I foresee, at least in the city of Philadelphia, especially where property taxes are still pretty low, I definitely think more and more people are going to continue to purchase.
Excellent. Okay. Cool. Anything that you want to add on to that? You want to put a little mortgage tag in case they want to go through you?
Strauss in the house, baby. Hashtag.
Is that your actual mortgage name?
Well, yeah. It's my hashtag, Strauss.
Okay, cool, man. Yeah, we'll be sure to put that on the video too.
I miss doing open houses. I do. I absolutely love learning and just experiencing new houses. But
what's your backlog, right? Or what's your backlog like?
I've issued probably about in the last 2 weeks alone, probably about 7 pre-approvals.
Wow. Okay.
Pre-approvals are good for roughly 90 to 120 days, so it really just depends. But people, they're ready to rock. So I think it's extremely important to be in the best position possible. So if you do find a house and you want to put an offer in, you're ready to go. But we'll get more into the changes as well in the mortgage industry.
Cool. All right, so next question. I understand that the government has decreased the federal funds rate, AKA the interest rate, and this is supposed to incentivize consumers to make big, large expenditures, such as houses, as it makes financing cheaper. Are you seeing that impact consumer demand currently?
So I'm very glad you brought that up. Very important to know as well, mortgage rates and the Fed rate aren't tied together actually. So when the Fed rate went down to 0, I received several phone calls. People were looking for 0% interest rate mortgages. When that happened, the exact opposite happened in the mortgage industry for a couple weeks. So interest rates are tied to the 10-year Treasury bond and mortgage-backed securities. And basically what happened was the mortgage-backed securities were selling off so rapidly that it increased mortgage interest rates. So what had to happen was the Federal Reserve stepped in and started purchasing these by the billions and billions and billions and billions of dollars. So we actually saw essentially 150 basis points jump in interest rates, but because of the purchases of these mortgage-backed securities, rates are back down to historical lows, which definitely is an incentive for a consumer to buy a house or refinance right now. Because rates are cyclical. It is all cyclical. Rates go down and they go back up. Obviously, them being down right now is a great time to be locked in to the best rate you possibly can. And that rate depends on what your goal is.
Got it. Okay. So it's, wow, I actually didn't know those two were not tied together.
Apples and oranges.
That's pretty interesting. Okay, cool. Okay.
Lower rates, more purchases.
Okay. So to sum it up, it's not spurring any consumer demand right now, but you think it will in the future?
I think it's an added advantage for sure.
Okay.
Definitely, it's not a bad thing to get a lower interest rate.
Right, never is. Saving money, right?
Mm-hmm. Absolutely.
Okay. So with everything going on, are lenders offering any programs to help combat the tough economic times that people are seeing? Are they offering programs to keep people who have lost their jobs in their houses?
So absolutely. So it's not necessarily the lenders who stepped in. What happened was part of the CARES Act, and just with everything going on, the federal government stepped in and said, hey, we are letting anyone that has a mortgage apply for forbearance. It doesn't matter if you're a bank, a non-bank lender, any servicer has to allow you to do forbearance. And just so we're 100% clear on what a forbearance is, it's essentially, let's say you have a monthly obligation of $2,000 a month. That is your mortgage payment. You just declared you were furloughed, you have to pull unemployment. So you call your bank, let's say ABC Bank, and basically they will put your next 3 mortgage payments will let you not pay April. Let's say you're not going to pay May, June, July. August comes around the corner, and those 3 payments that you might have thought you didn't have to pay later down the road or whenever, you have that shit due that 4th month. So you're not paying $2,000 in August. You're paying May, June, July, all in August, which equals $8,000. In my opinion, if you don't have the money to pay your mortgage today, how are you going to have 4 mortgage payments due, ready to go in 4 months from now? And the thing is, the biggest issue with the federal government, it was they didn't require any type of proof of hardship. So people that really, really need forbearance, to someone who's unemployed, who has 4 kids, they don't make a lot of money, so they're not going to get $1,200 from unemployment. That's somebody who could benefit from forbearance. But what's going to happen is so many people are applying for forbearance, mortgage forbearance right now. It's just going to cause a ripple effect. And if they can't pay on that 4th month, now they're going to be allowed to defer another 3 months, then another 3 months. And then what happens if you defer 12 mortgage payments, 12 times 2? You owe $24,000 1 year down the road. Right. If you don't have that, you will be foreclosed upon. So that is just, so it's really yes and no, because the lenders have to do this. They have to. But what they're actually doing to prevent further foreclosures, the banks have actually tightened their guidelines. And for good reason. Honestly, it's for a good reason. If you have a 580 credit score or below, and you originate that loan and keep it on your books, you have a 10 to 1 default rate. If you're at 580 to 640, it's 5 to 1, and then 680 plus, it's 2 to 1. So it's all, we're risk advisors, right? At the end of the day, we're emotionless risk advisors, and it's our job to crunch the numbers and make sure that the consumer is in the best position possible. But as a business, they also have to make sure they're not going to go belly up. And banks will be okay. It's the non-bank lenders, these mortgage servicers who for years have, not that they've pried on 580 and lower credit score borrowers, but that's their niche. And they also have to pay their investors too. So this mortgage forbearance crisis is not good for consumers, and it's also not good for lenders as well.
So the programs they're offering, they definitely don't relieve any payments. You're not getting money for free by any means.
Absolutely
You're just
not.
taking the money that you owe, stacking it on top of itself, and giving it to you in one lump sum whenever the forbearance is up.
Yeah, it's 2008. Again, it's a balloon payment that's due in less than a year. At least you get a couple of years to live in the house. It's
right. And we saw the massive defaults that 2008 caused, and 2008, the crisis that stemmed from those mortgage defaults led to the banks owning a ton of real estate. They had tons of houses on their balance sheets, and it was devastating. So have they implemented any guidelines with this Forbearance Act? Can you refinance the forbearance in any type of way to lessen that lump sum payment?
So hopefully, if the federal government's listening to us, please, what they're gonna essentially, so instead of a forbearance, there's a loan modification. So simply put, if someone needs 6 months, you take the 6 months that they have and you do a second mortgage and put it on the back end.
Got it.
No interest, if you want to keep it the same interest rate, so it accrues interest for 25 years and it's double the amount they owe at the end, fine. But if they force these people to come due, then I'm fearful that we're going to see a massive ripple effect of foreclosures. And one more thing, the worst part is the media. It's the media. They don't know anything. It's not the right, it's not the left, both of them. None of them know anything. All they want to do is drive fear, because that's how they get paid. They
Absolutely.
Get to see numbers. And what's happening is agents, not my agents, because my agents better know never to do this, but real estate agents are almost advertising, hey, I can help you buy a house, no money down, and you won't have to make a mortgage payment for 6 months. And it's like, you are literally going to be the reason 2008 happens again. Or you don't have strong mortgage advisors in your corner.
That's extremely powerful. So there are no programs in place right now. It seems like people are selling bad debt again, and we could be looking into a pretty gloomy future as a result of this whole thing.
Yes, I think so overall. But again, what's beautiful about real estate, everyone's situation is different. It's all about what your goal is. If you're a real estate investor mindset, you know, you're going to have a lot of great opportunities probably in about 12 months.
Right.
If you're somebody who still has their job, who can work from home and makes good money and is thriving through this, you're going to be able to buy a house still. So it is going to be doom and gloom, but there's going to be a lot of opportunity.
Yeah. So we've seen in history, you know, it's obviously darkest before the dawn.
Yes, Batman.
So as soon as things get really, really bad, ton of defaults, banks own a ton of real estate. They sell the real estate for pennies on the dollar. Banks aren't in the business of owning real estate. They're in the business of finance. And that's going to give way for investors to come in and buy the assets, giving them a buying opportunity.
Yeah, absolutely.
Okay. All right, cool. So if that's how mortgage servicers are handling the current situation, what are going to be the immediate impacts? What can we expect to see 6 months out from now? And what can we expect to see at the beginning of 2021?
So the most important thing is just really to see what the federal government does to step in to provide assistance with these mortgage servicers. I think and honestly, as of right now, it sounds like there's not a whole lot else. That's a lot more of assistance coming to servicers. So immediately for the first 6 months, I would say probably not going to see much, not going to feel much. After that, though, people are really going to start going into foreclosures. You're going to see big mortgage servicers. I'm talking big name players that you see on TV. They potentially are going to go out of business. Like I said, foreclosures and short sales will rise. But what happens is in 2021, when hopefully things start to blow over, foreclosures hopefully slow down. I think it's going to be the best buying opportunity we've potentially ever seen. Cash is going to be king. If you have the ability to put down offers, then, you know, make cash offers, you're going to be able to get some really good deals as an investor. But I think for consumers, we're gonna feel it next 12 months. And I really believe it is very challenging to fully predict what's going to happen, because good things can happen and bad things can happen. We're not 100% sure yet.
Yeah.
Everything depends on COVID-19.
Sorry, go ahead.
Everything depends on COVID-19.
Right.
You know, the doctors you've met Jamie before, my close friend. Jamie Bloom's a doctor at, he's been in the ICU at Jefferson, and he will not predict what's going to happen because he does not know.
Right. Yeah, it's a tricky situation for everyone, and nobody has the answers. It's an unprecedented crisis. We haven't dealt with anything that's like this since 1918.
Yeah.
So, yeah, God knows. All right, so for the next question, can you go into the difference between the different types of foreclosures and tell the viewers what a short sale is?
So basically, as simple as I can make it, foreclosure is you lose the house, you can't pay the debt. You hear the sheriff, it says, "Get out of my house." Not his house, but the bank's house.
Right.
A short sale is very different. It's you essentially, instead of foreclosing, the bank will agree for you to sell your house at a smaller balance than what the actual balance is on the mortgage. So foreclosure, get out. Short sale, the bank works with you, accepts a lesser amount of what you own and then it's gone.
So for a short sale, if you owe $200,000 on the mortgage, you work with the bank and maybe get that deficit down to 150.
Probably more.
It's a pretty good short sale, but either way, you're losing the house. Is that correct?
Yes, that is correct, and it will absolutely it will hurt your credit pretty drastically.
Got it.
So and that's the other thing too.
Yeah.
It's just if you foreclose on a house or have a short sale, you can't buy a house essentially for 3 years. FHA is 3 years, conventional is 4 years, and VA is 2 years, I believe.
It just wrecks your credit to the point where nobody's going to give you a mortgage again.
Correct. Or at least you have to wait that amount of time.
Got it. And you expect foreclosures and short sales, those will pick up when people default on their houses?
Correct. I do believe so, yes.
All right, now for investors, do you see any opportunities in the market in the short term?
Absolutely. Here's what I want to say. So the famous Gary Jonas of the How Property Group team, he told me that, and I truly believe this, it does not matter what the economic situation is, there's always a deal. There's always deals to be had. Obviously, the environment might change how many deals are out there, but bottom line is, it's all about the numbers. If your numbers make sense, then, and I'm not the guy selling you the house or the wholesaler you're working with or this guy or Joe Schmo. If you know your numbers and you have a deal, then you have a deal, bottom line. Now, short term, I think it's just short term immediately, I think people are going to have an issue because another side of the lending, I do just originate residential, but I work with hard money lenders and commercial lenders and non-QM lenders. And right now, hard money is extremely expensive. Again, we are risk advisors. That is what our job is because we don't want the consumer to get screwed. And we don't want to get screwed, obviously. But because of the environment we are in, it is way riskier to do hard money. So I think for the short term, it's going to be a little bit harder to acquire the capital and the funding to do a flip. But cash is king. If you have the ability to save a ton of money right now, I do believe that investor will absolutely be crushing it in a matter of time.
Right, great, well said. And just for our viewers real quick, can you define hard money?
So hard money is basically a short-term loan. It gives you the ability to buy the initial house. It gives you enough capital as well to put renovations in. And then what happens is, let's say it's on a 12-month term, you buy the house, you do the draw, you have a draw period as well with hard money, pull the money on your draw, and do the rehabbing. Once it's rehabbed, you put it on the market and sell it. And then it took 8 months. Part of the proceeds of the sale will just go to the hard money lender directly. And then you keep the profit, basically.
Got it. So hard money is just a non-conventional loan with stricter terms, typically from a private source.
Yeah, exactly. And again, it's a much riskier loan. That is why these companies have been forced to raise their rates because it's a tougher time.
Got it. Okay. So can you describe some of the opportunities that we're going to see after this whole crisis is over?
Yeah, absolutely. Basically, lenders are going to tighten their guidelines for a while. This will pass. At some point, it will pass. It could be a month. It could be 7 months. It could be 12 months, 13. You know what I mean? They will slowly weaken their guidelines, and then there will be a lot of deals. And the thing is, as a business, I love real estate investing. I just think anybody can do this. You don't have to have a college education. You just have to work hard, kind of be associated with the right people and the right team. But bottom line, there's going to be so much opportunity for people to make money. But those who save up cash and have the ability to make cash offers, they're going to really benefit from this. And the seller, the person who's selling the house, when this stuff starts happening really bad, you might be saving someone's financial life. You don't even know. Honestly, people could be dire to sell their home, and you might be getting a deal and making money off of it, but you actually might be helping people. So,
because they're in need of money.
Yeah, they're in need to unload their house, It is, and that's the thing. If something horrible happens, I know for the average citizen, they think, how could I ever leave my house? This is my dreams. My kids grew up here. I got married here. This happened here. My memories. When you do take the emotion out of it, if life happens really, really bad, you take the emotion out, you have a cash vehicle to save your life.
Right.
So unfortunately, life happens. You do a short sale, you do whatever you have to do, or maybe not. You just sell your house so you can reap the benefits, take the profit, go rent a place for 2 years, fix your credit, and you can always buy another house.
Got it. Okay, awesome. So for our viewers who want to get into real estate investing, with everything going on right now, what is your ideal investment? What does it look like in terms of timing, duration, real estate investment vehicle? What are you thinking?
So as you know, we were partners for a little bit. I've been under contract a few times. It didn't work out, and I would have 100% stayed that path of fix and flip. I really think that's where the market was. Now, personally, what I'm going to be doing is stacking my cash as much as possible for roughly 6 months. And I don't think it's going to be a flip. I like units. The more units, the more leases you can cash flow off of. In a perfect world, 6 months from now, I'm going to find a pretty distressed property that has a bad loan that they need to sell the place. And I'm going to come in and purchase that place. And at least 2 out of 3 units will be rented with signed lease agreements. So I will cash flow immediately. And if I need to maybe renovate one of them, I can live in the other. So if there's 4, get 2, live in 1, renovate the 4th.
Got it.
Maybe that's kind of perfect situation, because I still haven't got that. I want to get dirty. I want to flip something. You know what I mean? I want to learn.
So you're thinking multifamily, distressed property, something that you can put a little bit of muscle into and make it great.
Yes, exactly.
Got it. All right. Well, that's all the questions I have. Is there anything else that you want to add?
I do. And I think it's really important for everyone to take business aside a little bit. Obviously this has been a huge change for all of us, between our families, how we interact, how we communicate. Bottom line is, we're all in this together, no matter how much you might not like your left counterparts or your right counterparts, or you disagree with this person or that person. We are all in this together. America, the whole world is being affected by this. Global economies are being affected by this. Just remember, you are not alone. You have people, and we're in this together. Nobody's alone in this. That's my final thought.
Hey, couldn't have said it better myself.
Danny, you're great, man. I love this.
Thanks, man. Hey, appreciate you coming on. It was a blast.
Knowledge is power.
Knowledge is power, and apparently cash is king.
Cash is king.
All right. Well, thanks, Chris. Really appreciate you coming on, buddy. I'm sure we'll talk soon.
Absolutely, sir. And remember, everybody needs to get a crystal ball, right? But you can't, because I'm the only one who has it.
All right. Be safe, man. Stay healthy. We'll catch you soon.
Fist bump.
Later, brother.